Hi everyone, welcome back to the channel. My name is Zach. In this video, we're looking at Kevin O'Leary speaking on CoinDesk about ESG, the bills that we're seeing flying around in different jurisdictions around the world. But how much does all of that matter? Well, Kevin O'Leary is going to talk about proof of work and where he sees it all going. Let's jump straight into it.
Proof of work?
Well, regardless of what happens in the next few hours on this European vote, the pressure remains the same around ESG and Bitcoin mining. And so when you think about this, even Biden's executive order last week discussed climate change inside the order. That was a direct swipe at Bitcoin mining because it's very energy intensive. Now, having said all that, that's not going to change the outcome in any way. Bitcoin's not going anywhere. It's going to remain a very valuable digital asset. How it's mined is going to change. Let me explain. Number one, currently, many financial institutions and sovereign funds who are not permitted to own coin directly use public mining stocks as a proxy. If you look at the value of a mining share of a public company like Hut 8 or Hive or Marathon or Riot, which were heavily institutionally owned till very recently, is that they trade in accordance with the Bitcoin price because many of them keep their Bitcoin awards on their balance sheets and grow their asset value. Now, after Biden's decree, and exactly what the Europeans are voting on here, there's an objection to the amount of energy.
To be very clear before we go into this, if you want to see Joe Biden's executive order, we have actually done a whole audiobook where you can actually listen to the entire thing and read it. It's around 40 minutes long, but if you're interested, it's on at this channel. That being said,
being used to mine these coins and have them awarded. That's basically the problem. But there's a solution to it, and it's what I call the Norway Model. There's a new large facility being built right now, a company called BitZero in northern Norway, that is using excess hydro energy that's already existing and not being used at all on dams in far north in the Arctic climate, massive 300 gigawatt facility being built. The largest shareholder is a sovereign wealth because they actually have two solutions. Number one is they want to own the coin, so the company's keeping it on the balance sheet. But my point is that power is available at 1.9 kilowatt hour in US dollars. 1.9 cents per kilowatt hour. And it's not being used for anything except now mining coins. So the community there, 3,000 people, is employed. They're using the stacks to create hydroponics and grow tomatoes, and a canning plant has been built beside it to provide food for that region. And it is a way to actually integrate Bitcoin mining with a community that wants it there. It would solve the problem the EU is trying to ban. It would solve the problem that Biden is discussing in his executive order, and in fact is going to become the new model for Bitcoin mining. It'll emerge in places like Quebec, where hydro is available, upstate New York, Montana, and indeed all of these facilities are engaging this new idea because there's not going to be a need for a carbon audit. The biggest problem Bitcoin miners have now is they say, well, we're 56% or 60% compliant with ESG mandates, but they have to survive an audit. There isn't a single audit firm that will sign that because they know the tracking error on carbon credits is so large, it's unauditable. So at the end of the day, we, if you want to call it we as investors, have to find a new model. Whether you talk to the Europeans, whether this vote goes well or it doesn't, whether Biden's issue is going to be dealt with, the future of Bitcoin mining is sustainable, clean energy, period. And the Norway model is the way to go.
It doesn't look like this.
And we'll be hearing very soon more of Kevin speaking about the actual regulation that's been going into. I don't want to go into that video specifically right now, but with that being said, it's becoming clearer and clearer, right? Proof of work is definitely going to be needed, right? And we're seeing that with Bitcoin. You know, we're seeing people saying you proof of stake. Proof of work is going to be needed, and realistically at this point now we just need to figure out what is going to be the clean energy. How can, of course, mining companies actually find themselves within ESG compliance in different jurisdictions around the world? That will be a very interesting story, to say the least, and I'm sure we'll be learning more about that. I am getting the feeling, after looking at Kevin O'Leary's position on this for the past, I would say, year now, realistically, he's been talking about ESG compliance. He's been speaking about how the institutions will be able to invest, and I assume therefore afterwards we'll see actual general retail traders in general get back into it as well. But of course, they're not necessarily held to the same ESG mandates that institutions are held to. Either way, though, it is going to happen. It has to happen. That's the main point. It has to happen. Otherwise, this continues being almost like a black market. It's not a black market, but it's definitely very much seen as a Wild West market, and that will not work out long term. What are your thoughts? Let me know in the comments below. I'd love to hear your take for everything else happening. Especially, we're going to be looking at more Kevin O'Leary's takes very, very soon on the channel for more on everything happening in the Web3 space from crypto, NFT, and metaverse news. This is the Web3 channel covering everything happening in the Web3 space. For everything happening, hit that subscribe button, keep notifications on. Have a great day, everyone. I'll see you in the next Web3 video.